Hello, guys, and welcome back to the Sovereign Trader on whichever platform you are watching this video on. Now, today I have another video on Saturday, the 18th of April, and it's another trade that was taken yesterday on Friday, the 17th of April 2026. And this time it's on one of the minor pairs. It's Canadian dollar, Japanese yen. And what I've done is I've brought it back to a 4 hour chart where I'd initially marked up, and you can see up the top here, we've got the dollar sign sitting here, and I've used a rectangular box here. I'll just zoom in a little bit so you can see exactly what it is that I'm drawing your attention to. And we have this bullish candle here, this last bullish candle prior to this strong move to the downside, this strong displacement to the downside, yeah? And you'll hear this being called an order block. You may have heard it being called a banker's candle. They all mean the same thing. It's the last push up here before this strong aggressive move down that's went on to break this structure here. And as we can see, it continued all the way down here in this bearish momentum and move. Now, this was almost 1 month ago, yeah? This was on Wednesday, the 18th of March, that this happened, and I'll just zoom out again. So the market has made this very strong move to the downside, and it's came back up and it's tapped in. It's tapped in. I'll come back in again just so you can see. It's tapped into this area. Now, some would say that's been mitigated. It's been closed, and that's fine. I'm not overly bothered about that. I just know from previously marking up this area that the market didn't close above it. And that's the thing that I want to draw your attention to for the trade that was taken yesterday. So I've put a dollar sign here to represent potential liquidity sitting above this area. Okay? And I want you to think about that as we go through, and I take you through to the trade that was taken yesterday. So just to recap, we've got this order block banker's candle, which is the last push up prior to the move down. And it's been a very strong move with displacement. Yeah, so it's left, at the time, it's left this inefficiency in the market. It's just pushed straight down here on the 4 hour time frame, broke and closed below this structure here. And as we can see, it continued for quite some time down. Then we've had a pullback, it's came back into this area. The market's closing out this inefficiency, coming back up, doing its thing, being efficient, and has closed out that inefficiency and potentially mitigated this candle here. But there may still be some orders resting above. So fast forward 1 month to yesterday, and I was looking at the market and I thought, oh, interesting, coming back into this area. And just to give full context to this move here, from the end of March 31st, the market sort of changed direction again and started to come back up in a bullish direction. All right. So what does it do? It's being efficient, it's closing out any inefficiencies, and it's looking to take liquidity for the fuel that it needs to move, right? So liquidity equals fuel, guys, yeah? If it takes liquidity, it's giving it that energy to move, right? Just think of that way. If it takes liquidity, it's getting energy to move, and it looks to be efficient. The market looks to balance out. So it's looking to balance out any inefficiency, any gaps in the market price action, yeah? Right. Now, let's drop down to the 30-minute time frame. That's us got our 4 hour higher time frame context. Come down to the 30-minute, and here we are. Okay. Now, we know what this box represents. That is our area of 4 hour order block. Okay. So, what happens? What happens? Let's follow it and see what happens, yeah? This is Friday morning, okay? I'm not awake at this time. I've got to tell you, we do that well in the Sovereign Trader, we can get a long lie, okay? So here's the start of the day. I'm in the United Kingdom, I'm in the London time zone. The market opens way back here on the crossover. We have the Asian session. The Asian session, the market moves up, completely closes out that position, and sweeps any liquidity resting above. So I can get rid of this dollar sign and I can close that box out. It's gone. Okay? That position has been fully mitigated, liquidity swept, and then the market starts to change direction. Okay, so I'm sort of getting up round about 7:30, 8 o'clock in the morning, sort of starting to waken round about that time. And what we can see here is during that London session yesterday, which was Friday the 17th of April, it came up to this area, took that liquidity, that fuel, and then started to change direction to go bearish. All right. And what you can see here is I've marked out this confirmation, and these letters stand for change of character, because I like to try and play things on the safe side. All right, I'm thinking I'm going to watch this just in case it sort of comes back and then starts going bullish again, because bear in mind, we bring it back out, the market's been going bullish, as I said to you, from the tail end of very last day in March into April, we've been going bullish. So I want to be a little bit risk averse, if you will. I want to play it on the safe side, and I want to see what's going to happen. So I've brought it into the 30-minute time frame, and I'm just going to wait and see what happens. And in the meantime, while I'm waiting, I'm going to do what I always do. I'm going to look to see where the market may wish to go. Now, this dollar sign represents potential liquidity resting below the market open, and the previous day some market structure here, which is resting just above a 30-minute fair value gap, an inefficiency in the market. And I also look down below and I'm doing exactly the same thing. I'm pairing the two up. I'm pairing up potential liquidity with inefficiency. And we can see down the bottom here, we've got another 30-minute fair value gap. It's an inefficiency in the market. It's a gap in the market. And just above it, potential liquidity resting below these lows. Okay? Really simple. That's all I'm doing. And I've marked this area up to say, if the market comes down and closes below here, this is a real confirmation for me that the market's starting to change character. It's starting to change from a bullish market to a bearish market. Simple as that. So, what happened next? Well, I've put an alert on this line. I've got an alert here that tells me that the market has closed below this line. And after that, I'm thinking, okay, great. I want to see on a lower time frame if I can bring our Scalper's Edge 2.0 entry model in. So I drop to the 5-minute, all right? I drop to the 5-minute and I bring in our exponential moving averages. And I set an alarm on our EMAs for the exponential moving average cross, all right? Now, I'm only interested in taking sells. So I'm only interested when the short EMA, which is in red, crosses below the medium EMA in blue to the downside. Why, may you ask, I'm only looking for sells? Well, everything I've just came through there in the last minute or so, the market came, took that liquidity, starts moving in a bearish direction. I've had the confirmation of a change of character. Now, obviously, there are internal changes of character earlier than this, but as I said, I'm playing it safe. I want to be almost 100% certain, or as certain as you can be. Nothing's ever 100%. The market will do what it wants. And I want to be fairly certain of my entry. I want to say, okay, everything's lining up here. Higher time frames give me the direction. I'm now in Scalper's Edge 2.0 mindset, and I get my alarm as, and I'll zoom in, we see these EMAs cross right here. Now I'm going to mark that off with the vertical line. I'll just give it on that candle there. Okay, That'll do. And now we go to the 1 minute. Those of you who are familiar with Scalper's Edge 2.0, it's a 1 minute execution time frame. And what am I doing now? Okay, I've had my cross. Market continues to the downside. Okay, that's great. Perfect. That's what I'm looking for. Now I'm looking for pullback and continuation. So if we come right in here, what I want you to understand is when I get the pullback here, the fact that it's not too deep is fine, but I wasn't really feeling that I had a great deal of strength and momentum here because it starts to almost consolidate. We're getting a mixture of green and red on my chart, which means we're getting some buying candles and some selling candles, and the mixture of the two here without any great strength. I'm saying, okay, I'm going to wait. I'm just going to wait, and I'm going to wait till I get strength, unopposed strength. What does that mean? It's, in my case, my candles selling to the downside, going short, are red. So I want to see strong red, and then I'll take my entry. Entry, we know the criteria I'm looking for. Exit, take profit. Well, we have one here, potential TP target, which was an inefficiency that we've marked up before. And the second one is down there. All right. Second one, as I've said to you, is down here, sort of bottom of the market, if you will, if you look at it in this, on this 1 minute time frame. What time of day is it? Well, it's currently, at that time, it was early afternoon for me in the UK. It's early afternoon. We're now in the New York session. We're sitting round about 20 to 2 in the afternoon, 1:40. So I think, okay, rather than go for this one, I'm going to aim for this one. And if you've seen my entries before, you'll know I like to try and go for around about the 50% of any inefficiency. I like that. What does it mean, 50%? Why? Well, they call it consequent encroachment. It's the midpoint of a gap in the market. And my logic behind it is, if it comes in and taps that area, I get paid without finding out whether it goes all the way to the bottom. And that's what I did. So here we are. I'm on the 1 minute time frame. I've got my TP target in mind. I just need my entry. And we get it here. We've got momentum because the EMAs on the 1 minute are in line with the higher time frame EMAs in the 5 minute. That means the short is below the medium. We're going bearish. And as soon as we break through here, just this low here where we are, I can see we're coming down. Yeah, here's the 5 minute cross, bearish. We're breaking structure to the downside. We're coming lower. And as soon as we come in here, which was 1 minute, 2 minutes, I'm the 3rd minute of a red candle, I came in on that. And I take a structural stop loss of 7 pips plus spread just above this high here. So market does its thing, works its way through that inefficiency. That's taken, continues down to the downside, and later on in the day, just round about, is that about quarter past 3 my time? Quarter past 3, 16 minutes past 3, the TP's hit, and we're in for a 1 to 8 risk to reward. So that is the CADJPY. It's got a mixture of a few things there. We've got some smart money concepts, and we have a Scalper's Edge 2.0 lower time frame entry. I hope you enjoyed that. If you did, if you're in the Facebook group, please like and comment. If you're on our other social media channels, YouTube or whatever, subscribe, like, comment. Your support means a lot to us, and we really appreciate it. Thank you, guys. Take care. All the best. Bye-bye.